Hello and welcome to Pro Trader Strategies Market Commentary for Friday, June the 15th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. For my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can implement in your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on with some economic data. You know, the summit over in Singapore went over pretty well. Now, back in the United States, a lot of stuff being talked about with the FBI not playing so nice. So that's maybe causing the overall markets to have a bit of a dark cloud over them. But let's take a look at the economic data. We got European final CPI consumer price index coming in line with expectations at 1.9%. Final core CPI came in line with expectations at 1.1%. Remember, core strips out automobiles, things that are a little bit more volatile like food and energy, things like that. Then we also got here in the United States, Empire State Manufacturing came in at 25, expected to be 19, so much better than expected there. Well, on the other side of the coin, we've got capacity utilization rate coming back off a little bit to 77.9, was expected to be 78.1, so not a huge miss there. Industrial production pullback came in at negative 0.1%, expected to be a positive 0.2%. Albeit last month they did revise the number up from 0.7% to 0.9%, so we're making up a little bit there from the revision to make this number not look as bad. But anytime you get those negative numbers on industrial production, you got to start wondering. Then we got University of Michigan consumer sentiment came in at 99.3, expected to be 98.5, and they revised last month's number down by that exact amount, 0.8%, so a wash there. All right, and University of Michigan inflation expectations, which isn't widely looked at all, came in at 2.9%. So on to the overall markets. Crude oil finally really falling out of bed, down $2 here. And I was talking about this, down to that 23 handle is where we are looking to go, because I think that it wants to migrate back to the point of control before anything else happens. We talked about this flagging pattern yesterday. Probably should have set something up for it a little bit better, but at some point it looked like one leg was ready to drop, and here we go. The day after me talking about that flagging pattern, we are seeing that move happen. So crude oil coming off. Gold even having a worse day over here. That it was stuck in a trend as soon as it broke out past the point of control for the most volume. That being said, we slammed right down to the 61 fib level here and have paused. So it did break below there for a minute, but we have since come back above that line in the sand, if you will, and are hovering above that. So the bulls really are going to try and defend that all day long. Then we have Bitcoin. It's off a little bit today after yesterday's rally. I told you, I think for this to really feel like conviction to the upside, or we've really found a bottom, yesterday was really the day to slam down and touch that 5880. Since it hasn't happened, I think it's still lingering over the market. So Bitcoin futures struggling a little bit today, but it's been in its range since that big drop. Then bonds, probably the only thing green on the board today, as there's no other place to put the money today, it seems like. So bonds up a bit, albeit only about a half a point, which isn't a very big move at all. VIX up slightly, still in the 12 handle though. I want to see that thing get back up into the teens for sure, because that would give us some volatility in the market to take advantage of. Right now we've got the Dow Jones Industrial Average off about 200 points. It was off about 250. I thought it was really going to come down and test this 23 Fibonacci level a little bit more than that, maybe even touch on the point of control. Hasn't gotten there yet. Day's still young, but Usually around this time, we used to call it a flight to the Hamptons, beginning of the summer. Everybody goes to the Hamptons on Fridays and leaves early. We see that volume kind of slow down, and I think we might start seeing that today. If we start seeing that volume come out, usually on the retail side, we start getting a late afternoon rally as the big money starts walking and heading to the Hamptons. Then we've got the NASDAQ coming off again. I thought after yesterday it's settling up in that trend channel. We were going to be looking pretty good to get back in there. Today's market action slammed right back down, looking like it wants to come down and test this 50 extension again. E-mini S&Ps, similar situation. We rallied up, tried to test that 78 Fibonacci level, and now we're starting to roll over. Anytime we start seeing this, that's not too good. It may want to, or it's likely to come down and test this 61 Fibonacci. I would say even before it even has a chance to go up to that 78 Fibonacci. I think it's going to roll over a little bit here as well. Nice little flash crash today. Mini flash crash would make my portfolio look a lot better. So I'm kind of rooting for a bit of a correction today, more than we're seeing right now, especially in the blue chips. But here's the daily chart of the mini S&Ps. You can see almost no effort to wash out the shorts from the overnight inventory. So today, just consolidating as we go along. Usually we'll try and see them get flushed out, but we aren't seeing that yet today. All right, let's talk about a few things I've got going on. I still haven't covered this Disney trade. I'm going to try and get out of it sometime today. It's right about where we were yesterday, so it didn't really hurt me to get to leave this on. Thought on that morning move, we were in negative territory. It was looking pretty darn good. I thought we were going to have a bit of a retracement here. It's not happening as of right now. I thought we'd get an engulfing candle like it's done, as you can see, in the past year. It's kind of mandate, it seems like. We're not getting that today, but like I said, the day is still young. One problem with my theory is that, with the rush to the Hamptons, we might not see that correction I really would like to see today. IBM, similar situation. We had a lot of move in this back and forth. Not too often can you nail the number, but I nailed the number on the 145 handle with my butterfly. The problem is my butterfly was for an expected move outside of the expected range, if you will. It looked like it was going to do that a couple of times, but here we are juking back and forth and right back to where we started. So that IBM trade is not looking good, and I got to get out of it by the end of the day because I don't want to get assigned on it. SPY, I don't know how I didn't get assigned on this one, really. This is my other butterfly that I have on the 252, 272, 292 put butterfly. Again, stuck in the range, almost right there where I don't want it to be. 76 isn't outside of the range. I need it to move a little bit better than that for me to feel really good about it. But again, I'm going to have to cover this trade by the end of the day. But because it is both the IBM and the SPY are pretty close to max losses, I am going to just let it ride to the end of the day. But I don't want to get assigned on it, so I will cover that by the end of the day. A couple other things that are coming off of my board right now is American Airlines. Remember, I did on a call diagonal for the call diagonal webinar. Well, my July 49 calls have expired worthless, so now I have on the July 38 calls that I'm long. Need a rally here out of American Airlines. Don't know if I'm going to get it with the lower prices in oil. If we can continue to see that, my long duration July contract that I'm long should benefit from that, because that would increase the margins of the airline, so that might help them to the upside. So letting my short call expire worthless, just like we planned, but now I need that rally. I wanted this little bit of a correction, but now I need that rally to make my long calls good. Similar situation in USO. Not really, actually. It's not really a similar situation. Remember, I played around with both of these. I did the June and the July. I'm leaving on the July 14 calls in USO. I'm long the July 14 calls in USO. With today's market action in crude oil, it's not looking too good. I've got an itchy trigger finger on my July 14 calls. So the June 14 calls expiring worthless. The July 14 calls almost worthless. So I'm going to leave those on because stranger things have happened. So I'm going to leave that on for right now. So just a couple of things expiring. Wanted to let you guys know. I haven't covered any trades as of right now, but I'm going to have to stay on the watch because I have some things I got to do. I got to cover the IBM and I got to cover that SPY. The other two I can just let go. All right, that's it for today. Yesterday's webinar was great, so if you guys missed that one, it is on the put calendar. All right, check it out because the rules I have around this make it very easy to set up so that you know that it is the right environment, the right strategy for the right strike, okay? And I go through all those rules. Check it out at protraderstrategies.com. Other than that, have a great weekend, and if you can't take that, take it easy.